Your savings could lose half their value by next year, and you won't even see it coming. Ray Dalio, the billionaire who predicted the 2008 crash, who manages over $100 billion, just dropped a bombshell. America's $38 trillion debt will be repaid in worthless, devalued dollars. Right now, the U.S. government pays $1.1 trillion just in interest every year. That's more than the entire defense budget. Politicians have only one way out: print money and destroy the dollar. If you're holding dollars, investing in U.S. stocks, or planning retirement, the next 12 months will change everything. Don't skip this video. Your financial future depends on it. Before we dive in, you need to know who's sounding this alarm. Ray Dalio isn't just another investor. He founded Bridgewater Associates, the world's largest hedge fund, managing over $100 billion. He's been on Wall Street for 50 years. But here's what makes him different. He's been right about everything. 1971, predicted Nixon would close the gold window. He did. 2007, warned of housing bubble collapse. 2008 crash happened. 2020, told everyone to buy gold at $1,500. Today, $2,800, an 86% gain. In his book, Principles, Dalio reveals his secret. History repeats in cycles, and right now, America is at the end of its long-term debt cycle. Listen to what he said in 2025. America is like someone who's been overeating and smoking their whole life. A heart attack isn't a possibility, it's a certainty, and it's coming within 3 years. That's 2026. That's now. Dalio has studied 500 years of empires rising and falling. The pattern is always the same. Massive debt builds up, government can't repay, they print money instead. Currency dies. The US dollar is the world's reserve currency. When it collapses, the entire planet feels it. So when Ray Dalio screams a warning, you listen. Let's talk numbers because they're absolutely terrifying. As of February 2026, U.S. national debt is $38.4 trillion. Let me put that in perspective. Every American citizen owes $115,000, including babies. Every taxpayer owes over $300,000. The government borrows $5 million every single minute. But here's the real killer: interest payments. In 2026, the U.S. will pay $1.1 trillion just in interest on old debt. That's more than the entire military budget, more than all education spending, more than Medicare. And it's accelerating fast. In 2020, interest was $400 billion. By 2030, projected at $2 trillion. Why is this happening? Simple. The government spends $7 trillion but only collects $5 trillion in taxes. The $2 trillion gap? They borrow it. Here's the death spiral Dalio warns about. Step 1. Government borrows money, issues bonds. Step 2. Must pay interest, needs more money. Step 3. Borrows more to pay interest, interest grows bigger. Step 4. Repeat forever. But here's the problem. Who's buying these bonds? China was the biggest buyer. Now they're selling. Dumped $800 billion last year. Japan is backing away. Foreign investors are losing trust. When nobody wants your bonds, interest rates spike. Right now, Treasury yields are over 5%. Every 1% increase costs the government $380 billion more per year. The Congressional Budget Office says by 2030, U.S. debt will hit 200% of GDP. That's Greece levels, Argentina levels. But won't the U.S. just default? No, and that's the problem. The U.S. controls the dollar printing press, so instead of defaulting, they'll do what every failing empire does: print more money. And when you print money without real value, you get inflation, the 10 to 20% kind that destroys savings and silently steals your wealth. Dalio calls it the inflation tax. They won't raise taxes, but they'll make every dollar worth less. Your $100,000 in savings, after 5 years of 15% inflation, is worth $49,000 in real buying power. This isn't theory, this is math. In January 2026, Ray Dalio gave interviews to Fortune and CNBC. His message was clear. This debt will be paid, but not in today's dollars. It'll be paid in devalued, inflated, worthless future dollars. Here's what that means. Governments have 3 options for dealing with debt. Option 1, raise taxes. Political suicide. No one wins elections by raising taxes 40%. Would trigger a recession, riots, and protests. Option 2, cut spending. Touch Social Security, millions revolt. Cut Medicare, political death. 70% of the budget is mandatory, can't touch it. Option 3, print money. Easy political win, no angry voters today. Problems come later. This is always what they choose. History proves it. Weimar Germany, 1920s, printed money to pay war debts. Inflation hit 29,500% in 1 month. People needed wheelbarrows of cash for bread. Zimbabwe, 2008, printed for government salaries. 89 sextillion% inflation. Money became toilet paper. Venezuela, 2016 to 2020, printed for programs, 1,000,000% inflation. The economy collapsed. America won't become Zimbabwe, but even 10 to 15% annual inflation is devastating. Think about this. 40% of the $38 trillion debt was added in just the last 5 years from COVID stimulus. The Fed printed $5 trillion in 2 years, and they'll do it again. The dollar index shows the story. 2020, dollar at 100. 2025, dollar at 92. 2026, dollar below 80, a 20% crash. What does this mean for you? No matter where you live, imports cost more. Electronics, cars, 30 to 40% more expensive. U.S. stocks crash. The S&P 500 might look stable, but loses 20% in real value. Savings eroded. Your money buys less every month. DALIO's personal strategy. From his public portfolio, 40% short-term inflation-protected bonds. 30% global stocks, not just U.S., 15% gold and precious metals, 15% alternatives, commodities, crypto. Notice what's missing? Long-term U.S. bonds and heavy U.S. concentration. DALIO posted on LinkedIn, "We're entering a major devaluation cycle. Gold, Bitcoin, and hard assets will surge as paper money dies." He's not just talking. Bridgewater increased gold holdings by 45% in late 2025. The smart money is moving. Are you? You're wondering, if this is so bad, why hasn't it crashed already? Because systems collapse slowly, then all at once. Think of a dam with a crack. Water leaks for years. Pressure builds. Then one day, boom, total failure in minutes. Here's why 2026 is the turning point. 1. The petrodollar is dying. Since 1974, all oil was traded in U.S. dollars. This created artificial demand. Everyone needed dollars to buy oil. But watch this. 2023, Saudi Arabia ends 50-year petrodollar pact. 2024, Russia and India trade oil in rupees. 2025, China and Iran use yuan. 2026, BRICS nations launch their own currency. When oil isn't tied to dollars, global demand collapses. Trillions of overseas dollars flood back to America means massive inflation. 2. Interest rate trap. The Fed is stuck. Keep rates high, government debt payments explode. Cut rates low, inflation surges, dollar crashes. Either way, we lose. 3. Political chaos. Trump 2.0 is promising tax cuts, less revenue, massive tariffs, higher prices, more spending, more debt. Congress fights over the debt ceiling every few months. Government shutdowns, pure chaos. 4. Global power shift. China, Russia, BRICS nations want the dollar to fall. They're actively working against it. In 2025, BRICS surpassed the G7 in total GDP. The multipolar world is here. DALIO's research shows when empires lose reserve currency status, it happens fast. Britain's pound collapsed in under 10 years. The US dollar is next.
Enough warnings. Here's your action plan. Step 1. Audit your portfolio right now. Open your investment apps, Vested, Grow, Indie Money, whatever you use. Calculate what percent is in U.S. stocks and bonds. If it's over 60%, you're overexposed. Step 2. Rebalance immediately. Target allocation, 30 to 35% U.S. stocks, down from 60 to 70%. 20% gold, GLD ETF, physical gold, sovereign bonds. 20% international stocks, India, Indonesia, Brazil ETFs. 15% commodities, oil, agriculture. 10 to 15% cash in local currency. Step 3. Start gold position. Even 10 to 15% makes a difference. Options: physical gold coins or bars, gold ETFs like GLD or IAU, sovereign gold bonds. Don't wait for the perfect price. You're buying insurance. Step 4. Build emergency fund. 6 months of expenses minimum in local currency. This protects you during chaos. Step 5. Follow the data. Ray Dalio's LinkedIn, debtclock.org, bookmark it. Dollar index movements, gold prices, BRICS summit news. Step 6. Invest in yourself. Learn skills that can't be inflated away. AI and programming, digital marketing, content creation, remote work skills. Your skills are your ultimate asset. Dalio's wisdom. Prepare for the worst, hope for the best, and take what comes with intelligence. The crisis is coming. Those who prepare will not just survive, they'll thrive. Let's recap the key points. A. Ray Dalio, who's right about everything, warns debt will be repaid in worthless dollars. $38.4 trillion debt, $1.1 trillion annual interest, unsustainable. History proves printing money destroys currency. 2026 is the turning point. Petrodollar dying, dollar crashing. Your action steps are clear. Cut U.S. exposure, buy gold, diversify, build skills. The best time to prepare was 5 years ago. The second best time is right now. Do 3 things. Subscribe to Silent Empire for daily crisis updates. Comment what % of your portfolio is U.S. assets, and share with everyone you care about. Next video, Trump tariffs versus debt crisis, what really happens? Hit the bell icon. The empire is crumbling. Don't get caught sleeping. Thanks for watching. Protect yourself. See you next time.